Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Pieter Krügel, CEO of Mast Energy Developments. Welcome back to the podcast, Peter. How's things?
Hi Phil, hi Kevin. I'm very well, thank you, and thanks for having me back. It's been a very busy time since we last spoke, and we've got some further positive news out that we're going to talk about today.
Absolutely, yeah. So we just saw news that Mast has completed a £5 million investment agreement with Powertree, securing full funding for its 7.5 megawatt Hindlip project, which will now move into construction with commissioning expected within 9 to 12 months. This marks the start of a long-term growth capital partnership with further projects anticipated. Trading revenues at MED's Pyebridge site continue to rise, with February 2025 revenues reaching £77,000 and March preliminaries at £86,000, averaging £24,200 per megawatt per month across the past 9 months. The company also announced a significant reduction in leverage positions held via CFD swaps, with Cantor Fitzgerald cutting its stake from nearly 6% to 0.23%, and SpreadX believed to have fully exited. Peter, you highlighted the strategic importance of MED's flexible power assets and the strength of its evolving financial and operational position. Peter, firstly, congratulations on securing the £5 million investment from Powertree. Can you just walk us through what this means for Hindlip project in terms of timelines, ownership structure, and the broader implications for your growth strategy?
Yes, thank you for that overview, Phil. That's spot on. And yeah, regarding our completion of the Hindlip deal, we announced the signing of that agreement just over a month ago. It was subject to certain conditions, which we've successfully satisfied now, and that deal has completed. So that project is fully funded with no further funding obligation from our side. We're going to move into construction, get that site into production, and that will add to our portfolio of megawatts in production, which is our ultimate strategy, is to grow that as quickly as possible. So, our Hindlip site, being our first deal with Powertree, is a step forward. We're already working on a second project with them, which is the basis of the growth capital partnership, and we expect that partnership to grow, and that's part of our strategy. So that's our strategy on the one side, and then we've got the strategy on the other side in partnership with Riverford, where we target existing sites, which we've very successfully proven our Pyebridge. That strategy has got certain other benefits, and we think that the two strategies being run concurrently will expedite the process to reach our target megawatts in production as quickly as possible.
Absolutely, yeah, that's very, very good news. Yeah, and then obviously Pyebridge, continues to deliver strong monthly revenues. It does feel like it just keeps on delivering and breaking new sort of highs, and obviously higher performance with these embedded benefits. How does this kind of trading data shape your financial modeling and confidence? Because it's always been about kind of scaling towards your 300 megawatt plus portfolio of production targets. So, how do you feel it's shaping up? And do you feel like you can continue to replicate this? Obviously, you've got Hindlip in production. You're talking about another potential site. Just how confident are you that you will reach this 300 megawatts in the future?
Yes, the ongoing positive performance from Pyebridge for us, have got very important benefits. Apart from the cash flow benefit, it also firms up our financial modeling and our outlook and our expectation. That's one of the reasons why we very specifically disclose the average revenue per megawatt per month in our monthly revenue updates, because that's a fairly reasonable yardstick to say that, if for every megawatt that you've got in production, multiplied by that number that we disclose, gives you a good idea of what the income stream from the PPA revenue trading side of things will be, coupled with the capacity market contracts on each site, as well as the embedded benefits, gives us a very predictable and a very income portfolio that, as you say, we can replicate on other sites. And that's exactly what we did when they came in and we started looking at Hindlip. They applied that exact same model. We compared that to Pyebridge. It's very much in line. It's also what Powertree expects. And keeping in mind that they've got a large portfolio, which they've constructed and own and operate for many years now. So they've got a much bigger data set, and it's very much in line with our numbers. So It's very positive. There's a lot of activity going on in the market. We're seeing a lot of appetite coming back to the table, especially from the funding side, debt and equity-wise. So yes, we're very excited. Things are moving.
Peter, you will be the operator of this site, or will it be Powertree, or who will be paid to operate it, if you like?
Yes, partnership with Powertree, they are the operators. And the main reason for that is they've got the economies of scale and the buying power to do it cheaper than we can at this stage. So at this stage, they're going to be the operator of that site. That might change going forward. Obviously, we're the operator of Pyebridge, and for any other sites that we acquire via our strategy with Riverford, we will be the operator. But in the case of our partnership with Powertree, they're going to be the operator just from a cost savings perspective. They can do it cheaper than we can at this stage.
Yeah, and what we saw in Spain and Portugal this last week or so, basically the lights went out literally. Do you want to explain how important the gas peaking is in respect of what happened?
Yes, that is a very, very good example of how critical flexible power generation is and how important the UK's commitment to flexible power generation is. So what happened in Spain and Portugal, and yes, there's no definitive answer at the moment, but it's becoming clearer that the dependency on renewables have played an important part in the outage. It might not be the sole reason, but I think more and more credible sources are saying that it played a very important part. And the problem that Portugal and Spain, what their grid is that they don't have dependent baseload generation on standby, unlike the UK. And that's why that happened there. So, and that's exactly MED's business model. And our solution is we provide that inertia flexible power generation which the grid needs in order to sustain baseload and avoid blackouts. So it's a critical part of the UK energy mix. The government and NESO have publicly stated that it's a critical part of their clean energy plan going forward. So we're a very, very important part of the energy plan for the UK going forward.
So Powertree and yourself are talking about a second site already?
Yes, we are.
And do you envisage that will happen in 2025?
Well, the expectation is that we'll sign that deal this year, definitely, because that was the premise for the growth capital partnership from the start. It's not going to be a sole single site. They were looking at our portfolio, which consists of more than one construction-ready site. We started with Hindlip just because it's the biggest site, but we're already looking at our other sites, and the expectation is that we'll do further deals in due course.
And will it be up to you to find these new sites for them to happen, or are they going to come to you as well with sites?
So regarding our partnership with Powertree, part of that deal is that, and a benefit for us is we can go and look for further greenfield development sites and bring that to the table, and Powertree will fully fund those.
Okay, but they're not going to bring ones to you. It's going to be you that initiates the situation.
Yes, exactly, and that's exactly what we want. Because I think a challenge that we've had up until now is that we've got these sites and we can find more, but how do we fund it? We've got a solution for that now, and I think that's a very important part of moving forward for us and unlocking real value. So we've got two funding partners now for each of one for each of our strategies, and from the development side perspective, we've got Powertree. They're committed to fully fund any development site that meets their criteria that we bring to the table, and we're already working on that as well. So we're confident that we can build our portfolio with them fairly significantly.
And going back to Pyebridge, from a Pyebridge point of view, we've seen February's figures and we've seen March's figures, and obviously April's now finished, so they're obviously coming shortly. You're in the region of £24,000 to £25,000 per megawatt before you add the other payments that are coming from the government.
Yes. So
surely that now becomes an asset where you can actually now effectively lend against that asset and pay back the debt that already is there with Riverford. So is that something that's in the pipeline?
Yes, we are looking at refinancing options, not because Riverford, don't want to stay in there. It's just purely from a pricing perspective. So, debt from commercial banks are typically cheaper than other types of debts. The repayment tenure is also more friendly, etc.
Yeah,
So
and surely longer term as well, which is obviously what you want.
Yes, exactly, because that will give us more cash flow out of the side and so forth. So yes, we are looking at that, and if it makes sense, and if everybody's on the same page, we'll certainly do that. We're already in discussion with commercial banks. The interest is very much there. The appetite is there. So very much an option we're looking at right now.
And we're moving into an area where there's probably going to be lower interest rates over the next few months, you would imagine, with Mr. Trumponomics deciding to rip up the rule book in the world. We will see. So the other thing you mentioned in the RNS was the share structure and the fact that a couple of structured deals are out of the market now through those RNSs. So do you want to expand on that as well?
Yes, so we've been aware of this, and it was very much an overhang in the market via these leveraged positions held by four underlying clients, but held by Spreadex and Cantor Fitzgerald. And essentially, both of those have been cleared out now, and we believe that overhang has been removed, and we further believe that that will benefit existing and new shareholders, because it will remove that ceiling from the share price, and for us it's good news.
Okay, so you think there's going to be the opportunity there for the share to move more freely than it had been, because there was a lot of selling in the market?
Yes, absolutely.
What sort of percentage had those two companies held?
Combined, they had in excess of 10%. It could have been as high as 15% at some stage. So it's very, very significant. And that's been ongoing for quite some time. And obviously every time we bring out positive news, that just dampers everything. We've seen that every single time. I mean, if we look back to our previous RNS announcement, where we announced the signing of the Hindlip deal with Powertree, our share price went up 50% in a single day. We traded 50% of our issued share capital in a single day. But all of that kind of just came down again. And we believe that, the leveraged positions were a part of that problem. But now with those out of the way, we believe that problem will not be there to such an extent, at least.
Yeah. Now they've come down, as I alluded at the opener. They've apparently their stake was from nearly 6% to 0.23% at the last reporting. So it looks, as you say, potentially like that they may be nearly out. But yeah, I just want to recap on the thing that you signed out of the RNS, Peter. That coming back to the Spain thing, that whether we like it or not, this the push towards total renewables like wind and solar is not going to happen instantly overnight. And as the longer it goes on, as you was highlighted, Spain and Portugal, the fact that they're so reliant on renewables like the wind and solar, and this lack of inertia within their power grid, which is effectively is generated from the rotating mass of these large generators. I've found in whether it be nuclear power stations or fossil fuels, that gives it this grid frequency stability of 50 hertz. You just cannot get that from the renewables. So whether we like it or not, you're going to still need burning of fossil fuels, nuclear power, gas peaking to keep that kind of like the stability within the grid itself. If they'd have had some sort of solution like that would have peaked in Spain and Portugal, who knows whether or not it would have failed? We just don't know. But also Tony Blair also recently announced that a reassessment of the country's net zero climate strategies, saying that any of the current policies are irrational and doomed to fail. So what do you make of that? He's effectively emphasized that the majority of the future emissions will come from some of the developing countries like China and India, and it's not fair to kind of penalize people in the UK because fossil fuel use is actually rising globally anyway as we speak. So what are your comments on that?
Yes, that's all very interesting. And, I think there's always two sides to a story. Our view is, we're very supportive of renewables. We believe that we have to move toward a net zero situation, as quickly as practically possible. For us, it's just a way of how do we do that? And I think what happened in Spain and Portugal is a very good, but a very important lesson for everyone globally, for each country. I think the UK is much better positioned than Spain and Portugal, is that specifically because of the UK's government commitment to flexible power generation, which includes gas peakers. We should also keep in mind that gas peakers, specifically the ones that MED, constructs and operates, are low carbon, low emissions. So that's important. And I think that's why the government has publicly said that those types of flex-gen gas assets will remain a part of the energy mix going forward. I think large baseload fossil fuel generators will be phased out globally, but we're just speaking UK here. And we do have a solution for that. We get our inertia from wind turbines primarily in the UK, but that's the wind only blows for 50% of the year. Where does that inertia generation come from the other 50% of the time? We don't have nuclear, and I think that's where FlexGen plays a very important role, and that's exactly what we do. So that's good.
Very good. On that note, we'll see Pieter Krügel, MED CEO. Thanks very much for appearing back on the podcast.
Good. Thank you, Phil. Thank you, Kevin, and hope to be back soon with more good news.
Yep, come back soon.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.